and welcome to our weekly market update with Morton Brown Family Wealth. I'm Dennis Morton here with Cody Demmel. How are you doing, Cody?
Good. How are you? Good
Doing well.
introduction there, by the way.
Thank you. Thank you. We'll tell you a little bit later why we're doing a musical intro and talking a little bit about guitars and succession later on. So we're going to talk a little bit today about buying unloved and out of favor investments and why the fear of missing out plays into that and what's out of favor right now that we might want to own. Then we're going to go into why there's a coin shortage. And then last, we're going to cover succession planning and transition, how it happens both in businesses and in family. So Cody, why don't you start up? What did you find this week about buying things that are out of favor?
Yeah, so there was an article that was talking about how retirees should consider investments that are out of favor currently. And then he was going over the different hedging and how expensive it is to make sure when there is a risk to the downside that you're not paying too much to protect that risk. And he was talking about how expensive it was for all the other investments currently. The one that was the cheapest was inflation, that I thought was very interesting because with all the stimulus that we've had, not only in the US over the past couple months, but throughout the world, we're hearing a lot of people talk about that inflation may be higher in the coming years because of that.
Mm-hmm. This is an interesting time to be looking at what is out of favor. Everyone is receiving their quarter end statements. So we just had one of the best quarters in decades on the heels of one of the worst quarters in decades. And you might look at different investments and say, man, there's some things that are really lagging behind here, but it's fair to say, is it something that's inexpensive to protect against something in the future? So one of the things that they pointed out in the article is where inflation expectations are right now. So they said anywhere between 1 and 1.5% over the next 10 to 30 years, significantly below historical averages, right?
Yeah.
So what are some of the things that you can buy as a hedge against inflation? What are some ways that you can invest with that goal?
Yeah, so one of the best hedges against inflation are tips because those are directly pegged to the consumer price index. So when the consumer price index, which is inflation, rises, so are the returns of the tips.
And TIPS stand for Treasury Inflation Protected Securities. So they are Treasury bonds, they're government bonds, but they behave differently. As you said, they're linked to CPI. You can also, one of the hedge would be using index products, things that have a link to market performance and can potentially have some upside. Because when you buy a bond, you're kind of locking in that rate of return and expecting some fluctuation. I mean, think back to the 1970s. Bondholders in the late 1970s were just crushed because they were owning securities that were paying them 3 and 4% when inflation was in double digits. So they just really lost a lot of purchasing power. It's interesting to look back on that time too, that if you had bought treasuries paying 16% when they were totally out of favor in 1981, the kinds of returns you would have had over the next decade. And one last piece, that comment on gold a little bit as an inflation hedge. We've typically looked at gold as not so much an inflation hedge. It can be spotty as that strategy goes. It's more of a catastrophe hedge. I mean, you're thinking about when things are really chaotic, as they have been this year, gold tends to perform well. But its measure as a pure hedge against inflation is a little bit trickier. So definitely a conversation worth having, though. Speaking of gold and coins and things of that ilk, there's a coin shortage, apparently. I don't know if have you been to a store where you've been, asked to pay electronically instead of paying cash?
Yeah, actually, earlier this week, I was finally able to get a haircut. And when I went there, they had a sign that said, no cash payments. We only accept credit cards. I thought it was a little strange, but then I realized why they're doing that now.
Right. In your wanderings, you may have noticed that there are places that are asking for exact change. There are certain vendors who are offering to pay you bills for your small coins, pay you a premium for just get small coins. And we sort of wonder, why is this the case? Is it because they're not making enough money? Is it because it's all being hoarded in the banks? It's actually this delicate balance that our economy has on how transactions are handled. So the article that we found in Forbes pointed out that about 26% of all transactions are cash, about 50% are electronic, and then you have checks and other means. But when that balance of 25% to 50% is tipped even a little bit or a lot as it was when everyone was paying remotely or using more cards, then suddenly things like coin-operated laundries or other places where coins circulate through the economy, when they stop circulating, suddenly they're just sitting in people's houses not being used, and we get a shortage. So I don't think it's something to be paranoid about, but it's one of these distortions, and we're going to talk a lot about this in the coming months. We saw oil prices go negative. We're seeing a coin shortage. We're seeing just all these distortions that when you remove some aspect of the economy, all those ripple effects start taking place. There's the meaningful little things, and then there's the big trends that develop. So you have to distinguish between distortions and trends.
Yep.
So the last thing I want to touch on today is succession. And succession is a term that we hear in the business world a lot, implying, who is the next generation coming up behind the current leadership. So the CEO has a succession plan for who's going to take over for him or her. Small businesses, the Lehigh Valley, it's such a small and mid-sized business community that a lot of the faces who have been there for a long time in charge of their organizations are now in the process of transitioning. The reason we had our Martin guitar intro today is that Chris Martin, a longtime CEO of Martin Guitar Company. So you might remember Eric Clapton playing a Martin guitar on his Unplugged special 30 years ago, and just wonderful instruments that I happen to own one myself. But Chris Martin announced that he's stepping down. That's a prominent face leaving a family-owned company. This is going to happen a lot, and we've thought a little bit about this as it relates to families, because the challenge in succession is that so much of the strategy, the vision, the execution can sometimes all be stuck in the mind of one person or dependent upon one person. And the challenge in succession is finding that next person who can seamlessly transition to what is to come. So I'm sure Martin Guitar is going to be going through that, whether it's hospitals, law firms, financial advisory firms going through that. But families go through the same transitions too. So often the financial responsibility is with one person. So maybe they have a spreadsheet, or maybe they know where all the accounts are, or they review all the statements, but it's all up here. What happens if that person no longer is able to do it, no longer wants to do it, or maybe is no longer here? So, I think one of those roles of an advisor is to provide some continuity there. Cody, have you observed kind of some of the pitfalls of the succession, or what have you seen in your experience in working with families?
It can be a problem, especially if something happens unexpected, like you were saying. If one person has all the accounts up in their mind, or even in the spreadsheet, and their advisors, they have accounts with different advisors, so they could have overlying assets, or their advisor and their accounting don't talk together, so they're not on the same page. Sometimes, especially if it's unexpected, it can just be a real disappointment and a surprise to the family. And then if everything on the financial side isn't in order, of course, that makes it even harder to.
Right. If I'm the indispensable person, if I'm the cog between all these spokes, there's value in that. But then what happens if that person isn't there? And make sure the right hand is talking to the left hand. We've encountered times where you say, well, I have an accountant that I trust, I have an attorney that I trust, and an advisor that I trust, but they never talk to each other. And that's a challenge too. Especially at a time like this, there's going to be, as we come into the end of this year and into 2021, the legal environment is going to change. We could have changes in tax law or state law. We've already had changes in retirement law. So I think it's really important to think about your situation, and you are that indispensable person. That's lean on us for that. Help us to kind of remove that burden from you and help to integrate, whether it's your spouse or your partner, or integrate other family members into the decisions, but also just, facilitating the introductions between your professional team and making sure you have the right people around the table. It's an important step to take and might help to navigate during the next couple of years. So we'll be thinking a lot about succession planning. All right, so we're in the dog days of summer. I think it's about 140 degrees outside right now. The glow behind Cody is Allentown actually melting. Summer reading. Have you been reading anything interesting so far this summer, Cody?
Well, my reading kind of changed recently since I have the CFP later this year. I've been diving into the CFP material. So that's what my material, my reading has been so far this summer, and it'll be for the next couple of months. But it's all
good. Answer. All right. It's a page turner. Yeah. The CFP curriculum is and Cody's completed that already. He's doing a refresher, but it's everything from taxation to insurance, retirement, estate law, just runs the gamut of holistic financial planning. So, and then Cody will sit for a comprehensive exam this fall. And so good luck with that. But my reading list it's a short book, just finished it up, called The Inner Game of Tennis. I'm not a tennis player, but it's about how to learn new things in a way and develop yourself without those constant, self-criticisms that sometimes hold you back. Like telling yourself, I can't do this. It's been a really interesting read for me as someone who's trying to figure out just how to be better professionally, how to be better in things like whether it's golfing or being some other hobbies that I might have. Just how do you improve without constantly saying, I'm not good at this, and getting past that. It was so Inner Game of Tennis by Tim Galloway. Really, really interesting book. All right. Well, thanks for joining us this week. We look forward to seeing you again next week. Hopefully, we'll have all three of us in the same place at least. But you and your families are well and enjoying these dog days of summer. Take care.